We will jump to GARS product that we promised we would talk about, and then we'll frame it with the crop insurance discussion. The global ag risk product that everybody understands, we've got our fixed costs. That means we've got risk. That means we buy a global ag risk coverage for $150 worth of margin protection, and then we cover 100% of your variable costs, seed, fert, and chem, as you go through the year. As we're spending money, your coverage is going up. This farm has $50 of risk through the year. We hope he has a good harvest. We hope he makes money. We don't have to pay a claim. Everybody wins. But if he has a poor harvest, our global ag risk product pays the difference on that accrual basis. And so global ag is going to pay the difference between our coverage and wherever their actual outcome was. Combination of yields, prices, quality, and what they spent on inputs. The new product that we call Yield Plus takes into account either an 80 or a 70% crop insurance claim across the farm, and you choose which one you want to buy. 80% crop insurance across the farm or 70% crop insurance across the farm, and we take that insurance claim and count it as revenue, whereas all our other global ag risk products ignore crop insurance. This one counts it, and when we do that, the Yield Plus product will pay the difference. And so what that does is it means that the global ag claim will be smaller because you've got this crop insurance indemnity that's counting as revenue, but it's also counting when we do the underwriting. So what that means is we get a much, much lower price. So in Southwest Saskatchewan, Southeast Alberta, you would see, a 70% savings in premium from the traditional global ag risk product. For Southeast Saskatchewan, Northern Saskatchewan, Manitoba, you'll see, maybe 40 or 50% savings to your full coverage premium. So it's significant savings because we're getting that crop insurance claim as part of the calculation of in the event of a GARS claim. And it's essentially what it's doing is it's turning your crop insurance policy into a GARS policy by giving you the benefit of price and input coverage and margin protection. It's just including your crop insurance yield payouts as part of the math.
Dave, do you have a global podcast risk solution as well? A podcaster's risk solution? Can you have a chart of that? Oh,
it's not a podcast yet.
Not a podcast yet.
Okay,
and we still have all the other products that work with AgriStability, work with your traditional standalone product. Full coverage is still our most popular coverage. We have all the other options, which what we find as we go through years and years of doing this analysis, that most often the right answer is going to be a combination of products. It's going to be crop insurance plus AgriStability plus GARS. Maybe it's GARS plus AgriStability. Maybe it's GARS plus AGI3. Maybe it's AGI3 and AgriStability and no GARS. And that's okay. It's understanding your numbers and then understanding your insurance options. And when we do that, the way we approach the business is to make sure that we've got all of the information. I got another spreadsheet. Thank you, Dean. We input all of the farm's information, their quotes from all of the various, from us, from crop insurance, from any of our competitors. We input all of this, and then we start to throw scenarios at it where we try to understand for the farm, what's your cost of production, what's your gross margins by crop, what crops are making you money, which ones aren't. We can look at different cropping options. So if you're thinking about changing out crops, as Jake said, if you're going to chase a market, you might choose to explore a crop you haven't grown. Well, we can do some math to help understand how's that going to affect your bottom line. And then we do insurance options. So we load different options into the coverage calculator. We can go, no GARS, different levels of GARS, take the premium, assume crop insurance at different levels, and then we essentially start to throw different scenarios at it. AgriStability, no AgriStability. We see this right now pretty often, is that farmers are not looking at AgriStability because they don't like the program, how long it takes. But for a lot of farms, it's the most effective coverage because it's based on those prior 5 years where we've got that really high commodity prices for a couple of years in the average. And so when we look at these scenarios, what we need to understand is all of your options, your costs, your rotation, and we start to pull out what is going to work for your farm. And this is work we do. M&P does it. Evan Maverick, he does it. There's probably others. Terry Becker, his group at Backswath, they do it. Lots of others out in the industry that do this work, but I think it's, the extra hour of time this time of year to make this decision with an informed lens, I think is super important. And with the new Yield Plus product, what we're seeing because of the savings versus, full GARS coverage, the premiums are much lower, but it allows for this combination, although you're not going to get double paid from crop insurance and GARS, because you're only going to get a check from crop insurance in a yield only scenario where we have high prices but low yields. Crop insurance will pay and GARS wouldn't, whereas in our traditional product, GARS would also pay. You'd end up getting
that's why I've always been a solid fan, no matter what additional bolt-ons you do. And I've been beaked in the industry for being biased towards this, and clearly I have no stake in Global Ag Risk Solutions, but I'm good enough at math to know I'm not very good at math, and the number of combinations and permutations you could design for your farm, the formula would be as big as the building that Jake's in, right? There's no way you could do that. So I always like to just buy concrete bottoms with some combination of AgriStability and Global Ag Risk, even if it's at a very low threshold or if it's this Yield Plus component. Now I've got a financial floor that is impenetrable.